Yeah, I think just finished one not too long ago. It was a building for um, company that works with veterinarian that works with animals. So 80,000 square foot building that was built new. He spent $35,000 on the study and received back $3.2 million. Kind of a highly unusual. Most veterinarian clinics are probably 3 to 7,000 square feet. Anyway, it is open 24 hours a day, every day of the year to, I'm sure, cover the expenses.
Hey, good morning. And this is Dr. Joel Shertok, president of Process Industries Consultants, a chemical engineering consultancy located in Newark, Delaware. Well, good afternoon, everybody. This is Dr. Joel Shertok with Process Industries Consultants. This is one of a series of podcasts on the modern chemical industry and some ancillary functions. So today we're going to switch a little bit. And instead of talking about the chemical industry, we're going to talk about something a little more esoteric. And we have Brian Haney with us today, and he will be discussing cost segregation. So, Brian, can you tell us some idea of what cost segregation is?
Yes, cost segregation is an application that the IRS has that people can accelerate depreciation on their commercial buildings and receive an income tax benefit back from the IRS.
Fantastic. So actually, it's found money.
It is found money, and in some cases, a lot of money.
So I guess my question is, do you get a check from the IRS or just get a discount on your future tax bill?
The way you have what you and I might consider as a credit with the IRS, and then you can apply that until it burns up and not make any quarterly or annual payments till you've burnt through all the money.
Okay. So it's not real cash, but it's just as good.
Just as good, because you can use the money for something else.
Wonderful, wonderful. So how did you ever get into this business? It seems a little off the beaten track.
Yeah, it's a business I came about in my background was I had built 523 homes. The market crashed in 2010. I went into commercial real estate, and during that time, someone had approached me with cost segregation, asking for the owner's name of a industrial project that I was working on. And I looked it up, looked up the company, and then as time went on, started doing cost segregation part-time, and then 7 years ago, I started doing it full-time.
Fantastic. So you kind of dipped your toe in a little bit at a time.
Yes, sir.
Very good. Sometimes that's the best way. So you're hired by a client. He says, gee, this sounds interesting. I could use some money. So how would you go about evaluating what the client's needs is and what the potentials are?
Okay. So basically, we just fill out a questionnaire to start with to be able to generate a proposal. So it's the name, address of property, type of property, square foot of property, how much did they pay for the property, what month and year did they purchase it, and correlate with it the income tax bracket that they're in. And then with that, we can come back with a proposal that basically explains cost segregation in more detail. And the money page is the last page, and it says you are going to pay us X dollars, and you will be getting X dollars back from the IRS. Typically, when we do that, we always generate those in a what I would call a soft manner, because we always want the clients to get a little bit more than maybe what we estimated it would be through the engineers in the company.
Okay. So is it building specific, or you can go in and look at just about any building and get some sort of credit for it?
Yeah, any type of commercial building.
Now, I come out of an R&D background, so most of my work was done both in chemical plants and R&D laboratories. Are those valid targets as well?
Oh, yes. Yes, that manufacturing, retail, hospitality, restaurants, hotels, car dealerships, all the commercial buildings that are where people pay income tax to the United States IRS.
So pretty general, basically.
Pretty general.
So what are the obvious benefits besides the most obvious one, which is found money?
The other benefits are moving forward with it. We give the client a list of all the component names, and then next to them is the total dollars of replacement costs. So we could take like windows or carpeting or electrical or HVAC or plumbing or roofing. If you do those and just spend 1/3 of total replacement costs, you can expense it as opposed to starting its life depreciating it over again. So many times people, would do 1/3 this year, 1/3 the next year, 1/3 the following year, and they expensed all the windows and or flooring, whatever they're working on out of the building.
That sounds pretty interesting. Very interesting. So Do you provide other services besides core segregation? Can you help me in other ways?
Yeah, there's we also do what's called a PAD study, a partial asset disposition study. Typically, those are either large remodeling jobs or the roof or asphalt parking lot. If you owned a building just for 2 or 3 years, even though you might have bought a 30-year-old building, if it was 2 years old, when you take those things out of the building and throw them into a dumpster to have hauled away, since it's only 2 years, it still has 37, 39 of value, and we can put a value on that for you, and then you can expense that off your tax return.
Very, very good. So let's suppose I do a renovation, the internals of my building, take out things, put in things. The outside looks the same, but the inside, the guts on the inside are all changed. Can I
Right.
get a credit for that too?
Yeah, that's a different study. That's called an improvement study. So we can go in and in some cases do a pad study and then also an improvement study. And that will also allow you to expedite and get depreciation at a faster rate, as well in some cases expensing things.
Very good. So there's all sorts of subtleties,
Yes.
obviously. So what if I just remodeled my building? Can I get some sort of credit there?
Yeah, that's part of doing like an improvement study.
So same basic generic idea. Okay. So if I were to engage you, what's your fee structure look like?
The fee structure is based on the amount of time that it's going to take to do the study. It has no correlation to the income tax benefit you're going to get back. So the engineers look at a building, look at it online, and look at the square foot and what we're going to do, and then come back with a proposal based on that. Typically, studies, unless they're very large properties, are anywhere from $4,000 to $25,000.
Okay. So typically, what's your ratio of your fee versus money saved? Could people understand what the return of investment looks like?
Yeah, in most cases, the ROI is anywhere from 25 to, I've had some as much as 110 to 1.
Okay. Beats the stock market.
It does.
Very good. So I have been using my wonderful CPA to do all my taxes for 20 years. This is the first that I've heard of this. Why would my CPA be aware of it?
In many cases, some CPAs aren't quite aware. It's amazingly been out for 27 years. It came from the IRS losing a big lawsuit from the Hospital Corporation of America, sued them on the premise. We owe all these taxes, but the components in the building don't all last 39 years. And so then the IRS spent 10 years how to do a cost segregation study with engineers. It's certainly predominantly most work than what a CPA would want to get into and handle. And that's why it's done by engineers. Like, for instance, what's the value of the ceiling tile in an office? So it's just too hard for them to really kind of work in that space because they're doing everything else with all the rules and regulations the IRS has for their clients to help them out.
Okay, so it's a pretty specialized little niche that the average CPA may not be aware of.
Exactly.
Very good. So can you define for me what a TPTM is?
Yeah, TPTM is tax property tax methods, the company I work for on the East Coast in Pennsylvania. And we've been in business since the very start. Eric Wallace is the principal in the business and has done everything that we can do for companies. So it's been pad study, improvement studies, even tangible property regulation studies. That's where we just had a client who was selling 700 McDonald's stores back to corporate McDonald's for $700 million. Would assume he purchased those over 25, 30 years, all the stores, went through all his depreciation tables and found for him $68 million he could expense. That was kind of left on the table by not following the tangible property regulations. CPAs have to answer 4 questions to be able to determine, do we depreciate this or do we expense it? So unfortunately, kind of the IRS has made that a little bit tougher than what a lot of people think it is. So that's part of it, as well as doing cost seg studies for, medium, small, medium, and large companies.
So like anything else in the tax world, things can be murky.
They can be murky, and it doesn't cost anything to find out what your income tax benefit would be either.
Okay, fantastic. So what was your most memorable assignment? Everybody has one that was either incredibly horrible or incredibly good. Which one is yours?
Yeah, I think just finished one not too long ago. It was a building for company that works with veterinarian that works with animals. It's a 80,000 square foot building that was built new. He spent $35,000 on the study and received back $3.2 million.
Wow. You throw a nice party for that.
Yeah, throw a nice party for that. It's kind of a highly unusual. Most veterinarian clinics are probably 3,000 to 7,000 square feet. But anyway, it is open 24 hours a day, every day of the year to, I'm sure, cover the expenses.
Fantastic, fantastic. Well, that's great. I mean, this is a niche that most people are not aware of, and it's a great way to save money. So thank you very much for this. So could
Yeah,
you give your contact information so anybody listening to this podcast can get in contact with you?
sure. You can reach out two ways. My email address is bcostseg@gmail, bcostseg@gmail.com. My phone is 630-277-75. And I look
Very
forward
good.
to helping people uncover that found money that they don't know about.
Fantastic. Hey, Brian, thank you very much for your time.
Thank you, sir. Have a great day, Joel.
Thank you. You too. Bye bye.